The big secret to beating Wall Street, even if you are just starting out. You know how everyone says Wall Street is rigged against the little guy? What if I told you that there is a big secret that turns the tables? Yes, Joel Greenblatt, the guy who ran a hedge fund that returned 40% a year for 20 years, he wrote a book just for people like us. It's called The Big Secret for the Small Investor. And in this video, I'm breaking it down into bite-sized practical ideas. So even if you're never invested in dollar before, you'll get it. Let's dive in and wait for the third point. That's the game changer. Number one, most pros can't beat the market. So stop trying to beat them or even beat them. Joel Greenblatt starts with this shocking truth. Even professional investors struggle to beat the market. They are good research teams, Bloomberg terminals, AI systems, and yet the average mutual fund underperforms the index. So, what does that mean for us? It means we shouldn't try to pick hot stocks on try the market. Example, let's say you pick five random stocks because you have a good feeling on those. Chances are you'll do worse than if you just bought an index fund just like the S&P 500. The big idea: put your money in a well constructed index fund and stop stressing. Idea 2: wait. Not all index funds are equal. Greenblatt introduces what he calls better indexes. Think of it like this: instead of buying a piece of every company in the market, what if you bought only the good companies? He created something called a value weighted index, where you invest more in companies that are actually profitable and undervalued. For example, imagine two companies. Company A earns $1 billion and trades at 10 billion market cap, while company B earns the same but trades at 20 billion market cap. In a value weighted index, company A gets more weight because it's cheaper for the same earnings. Simple, right? The next idea, number three, magic formula investing. Yes, that's what he calls it. Greenblatt's magic formula ranks companies using two things: return on capital, that means how well a company uses its money, and earnings. Earnings yield, that means how cheap the company is being traded in the market. Then you invest in the top ranked companies. That's it. That's all about magic formula. For example, let's say you find a company with 30% return on capital. That's excellent. And an earnings yield of 10%. Also great. If it ranks high on both, yes, it goes in your buy list. You rebalance once a year. You don't panic. You ignore the noise. He even ran a fund using this exact method and beat most mutual funds over a 10-year span. Idea number four: why it works and why most people still ignore it. Here is the crazy part: this system works, it's proven, it's public. So, why don't more people use it? Because it's boring. There is no drama. No, I bought Tesla before it for school, like things. It takes patience, and most people want quick results. But boring is beautiful when it comes to building wealth. For example, if you followed the magic formula from 2000 to 2010 through dot-com bust and financial crisis, you have still outperformed most pros. That's the power of consistency. Number five, small investors are one superpower. As a small investor, you can buy stocks without moving the market. No one is watching your trades. You don't need permission. You can focus on long term value, not quarterly performance. That's your edge. Big investors, they have red tape, politics, and short term targets. For example, a fund manager can invest in a tiny 200 million dollars company. It's too small to move the needle. But for you, you can scoop up undervalued gems no one else is touching. That's your superpower. Use it. So here is your simple path. Avoid stock picking unless you are using a system. Consider a value based index or just follow the magic formula. Stay consistent, stay patient, and let the big secret work for you. Now, if this clicked with you, I highly recommend checking out my other video on The Intelligent Investor by Benjamin Graham. It's like the older, wiser cousin of this book. Go watch it next. Thank you for watching.